Hello and welcome to my take on your Daily 5 for the 21st of April. My name is Julius de Kempenaer and it is my turn again to host the show today. In case we've never met, virtually or in person, I am a senior analyst here at StockCharts.com and the creator of relative rotation graphs. These are the swirly charts in which you can visualize the rotational character of markets. They are often referred to as RRGs. You can find my contributions in the RRG blog on the site, as well as on StockCharts TV, where I host Sector Spotlight every Tuesday from 10:30 to 11 a.m. Eastern. If anything related to sector rotation and relative strength has your interest, please check out these resources, or even better, subscribe so you will get notified when new articles and episodes have been uploaded. I enjoy the interaction with viewers and readers, so if there is anything you want to share, please make use of the comment sections below articles and videos, or simply drop me a message via email. But first, let's have a look at a few of those RRGs and some of their spin-offs to get a handle on current market conditions. The first chart I'd like to discuss is the RRG showing the asset class rotation. It's on the right here, on the left-hand side of the screen here, and the center, the benchmark of the chart, is the Vanguard Balanced Index Fund. That is a fund that holds 60% in stocks and 40% in bonds. So it's a pretty accurate benchmark for, balanced investors. What we see here is that ITOT, which is the total stock market index, is way to the right, which means that it is still a strong asset class. And on the left-hand side, you see government bonds, which is on the left-hand side, which means that it is a weaker asset class. So this chart alone tells you that there is a preference for stocks over bonds. Now, the direction of those tails, where ITOT is moving south and Gov is moving north, suggests that there is some short-term preference for government bonds over ITOT, but the horizontal distance on the RS ratio scale, the horizontal scale, still tells us a preference for stocks over bonds. And what I want to show you is how that rotation took place over the last year. And when we scroll back the chart and we highlight ITOT, you can see that it moved into the leading quadrant in July of 2020. And now I can animate until the end, and you can see that the stock market remains on the right-hand side of the graph. It hovers a little bit around that 100 level on the RS momentum scale, but it remains on the right-hand side, so it remains strong. And the fact that it is a very short tail that we see here tells us that it is a very stable trend. And if we move over to the direct comparison between ITOT and Gov, we see why that tail is so short and why that preference for stocks over bonds remains. Because this trend channel here that basically got a new impulse, got new fuel after the elections in November, is still very much intact. This rhythm of higher highs and higher lows keeps us with a preference of stocks over bonds. Now, the question that we need to answer is which sectors or which parts of the market will help us keep this trend intact. The next RRG shows the rotation between growth and value. So rotation a lot of people talk about for quite some time already, and this RRG pretty clearly visualizes the strength of value over growth over at least the last 10 weeks. But if we go back a little bit longer, you can see that it started, you can be as aggressive as here, then we're talking about the end of November, say November 2020. So where we are now means that value is still inside leading, growth is still inside lagging, which is a pretty obvious preference for value over growth, even despite the slight loss of momentum of value over the last few weeks and a little pickup of momentum of growth over the last few weeks. If we look at the price charts, then you can clearly see the relative strength of growth versus the Dow Jones US index, which is the benchmark, rolling over and pushing those RRG lines lower. And we can do a similar chart for value, and that's the reverse. You can see that this looks like a pretty long-term base building, so I wouldn't be surprised if we see more strength of value in the weeks and months to come. Now, also if we bring in the regular chart, then you can see that growth, if we just bring up a MACD and an RSI, very plain and simple, you can see that negative divergence is building up for the growth index, whereas if we do the same chart for value, you see no negative divergence. You see that the MACD is still pushing higher, and even the RSI is still above its previous highs. So from this angle, we continue to see a preference of value over growth. And in essence, that means slightly risk off or less strength for the market as a whole. The next angle I want to take to look at the US stock market is from a size perspective. The RRG here shows three indexes: the Dow Jones US large cap, small cap and mid cap indexes. And the center of the chart, the benchmark, is the Dow Jones US index, which is a very broad market index. And what we see here is that the small and mid-cap segments have started to lose relative strength quite rapidly over the last 13 weeks, the last quarter, while large cap has been picking up relative strength. Now, it's generally accepted, and we know that in risk-on periods, especially at the start of risk-on periods, it's usually the small and mid-cap segments that are rising fastest. They're the strongest segments. When the market gets more mature and risk is increasing, people move out of mid and small caps into large caps. And that's what we see happening right here on this chart. So this is another sort of warning signal that this market is getting more and more mature. We saw that value is taking over from growth after a long time. That's been happening for quite a while. Now, this is a little bit more recent, where people are moving out of small and mid caps and into large caps. So that's the second sort of warning signal for the market as a whole. Just remind you that the longer term picture, as we started to show with, is still a preference for stocks over bonds. It's just which parts of the market do we need to focus on in the next coming weeks and months. So we've seen that the market is still favoring stocks over bonds. So the stock market is still strong. There's no doubt about it. But we've also seen that value is beating growth. And we've also seen that large cap is taking over from small and mid cap. And those two items, those two views, are small warning signals. They're under the hood signals. So how does that translate into sectors? And the RRG on the left shows you the RRG for sectors. And the most important tails to watch are the three red ones here inside the lagging quadrant. These are technology, discretionary, and healthcare. Together, they're more than 50% of the market. And especially technology and discretionary are growth sectors that are rolling over, that are showing relative weakness. If you look at the chart here for technology, that's very clear that it is rolling over, and it's even worse for the discretionary sector. So these are pretty clear warning signals. Now, where is the counterbalance? Where is the other interest coming from? That's staples, that's materials, and that's industrials, which is slightly below here, I think. And that sort of signals that a market that has different market leadership. And I believe that it is coming from materials, from industrials, from staples, and maybe from real estate. And obviously energy and financials are still strong, but they're losing strength at the moment. It means for the S&P 500, in my view, that the uptrend is still intact, but we may see a slower pace with different leadership in sectors going forward. And this concludes your Daily 5. Thank you for watching. I hope you enjoyed the presentation. Please stay safe, and I hope to see you again soon at one of the shows here on StockCharts TV.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.